Okay. Oh, welcome to the show, Julie. Thank you for coming on. I got Julie here with South State Bank, one of my preferred local lenders here. Thank you so much for coming on, Julie. Say
Yeah,
hi.
thank you, Belle, for having me today. I really appreciate the opportunity.
Thank you so much. Thank you. Well, I want to let everybody know that you're on here today because you guys have incredible lending opportunities for the community,
Mhm.
and I couldn't not tell everybody about it. So, tell us a little bit about you, and let's jump right in because I think in term and everybody's going to benefit from what you guys have to offer.
Yes, yes. So thank you again for having me on, Belle. I really appreciate it. I'm Julie Surface. I'm with South State Bank. I've been a mortgage lender with South State Bank now for almost 10 years. I've actually been with a company, though, for 19. So I don't go far once I've found a place to stay. So I'll be here if you need me. But I did want to share some wonderful news that we have some great lending programs for first-time home buyers. So we have some 100% finance options out there, and just kind of depends on where the property's located, where the client's income level is. But it does offer, like I said, that 100% financing. And a great benefit to this program is that there's no mortgage insurance that is charged. Typically, when you're not putting 20% down on a loan, you're going to have that PMI or MI that's added to your monthly payment until you reach a certain loan to value threshold. And so a great opportunity here is that we don't charge that, which allows the client to be able to borrow more money for a home purchase rather than paying for an insurance fee. This community advantage program that we offer, it's like I said, it's 100% financing. There's a couple different ways that they can qualify. It's either based on where the property is located, either in a minority tract that is 50% or higher, or their income is $74,300 or less. And one of the benefits is that it's only counts as far as the income that we list on the application itself. So if we don't have to use overtime or bonus income, we don't have to put that on the application, which will help clients qualify for this program as well.
Wow. So you're not only offering 100% financing, but you also don't have mortgage insurance, which, I don't know how many loan applications we've been through or first time home buyers or just buyers in general that as soon as they see, this mortgage insurance monthly fee, the first question is, why do I need this? Right.
Right.
Right. Or do I have to pay this? Seems like a waste. I don't know. Stop me if you've heard this before.
A thousand times, trust me, a thousand times. They're like, why do I need this? Who gets this money? So yeah, I understand. And like I said, it'll definitely allows the client to be able to afford more home because they're not paying for a fee that, is taking up part of their debt calculations.
Right. Right. So people have an idea in my audience, right?
Mhm.
Mortgage insurance is typically uh, anywhere between $100, $150. It could be a little bit less, but based on the average loan amounts here in the area, that's typically what you see mortgage insurance for. And I know it's a percentage calculation of the outstanding loan amount, but based on our purchase prices around here.
Right.
Uh, so that is 100. Let's just call it $100 more purchasing power that a typical buyer can get from you than they would another buyer with a
Another lender. Yes,
another lender.
absolutely. Hmm.
So how so what are the restrictions on the loan program?
So we actually allow for a lower credit score as well. So
Oh
if
wow.
yeah, so in the lending industry, we always pull from all three credit bureaus, and we'll take the middle credit score is the one that qualifies the client. So as long as that score is over 600, then they can possibly qualify for this program. It does also have a maximum debt to income ratio of 45%. So that would include any existing obligations like your car payments, credit card payments, plus then the new housing expense. So we look at that. We take all of that into consideration. Student loans are also included in that, of course. Now, let's say that the client is very close to that 600 score. Maybe they're 10, 15 points away from being able to qualify for that program. We also offer what's called a rapid rescore option. So we can run their credit through a program that will give us suggestions on what the client can do in order to boost their credit score and those necessary points. Now, it's not guaranteed, but it does a great job of getting those scores up there. And I've had really great results using that program.
Okay.
And it's helped a lot of clients, be able to qualify for something like this.
And that is something as a service that you do as well, right?
Yes.
That's not something that they have to go somewhere else and do.
Yep, that's something that me or my team, Sarah, I have a loan assistant, would be able to work with the client to do that. And we can do it specifically for one specific bureau. We can do it for all three. It just really is going to depend on each individual client and their financial situation.
Right. And this rapid rescore. So, in regards to credit repair, so that, because I'm a little bit familiar with this rapid rescore system,
Yeah.
and this is essentially because there's reporting cycles in credit, right? Say that we paid off a collection, or we corrected a collection that was not supposed to be there,
Mhm.
right? We can move that reporting up so that it reflects the changes into your credit bureaus much quicker than if you just waited for them to cycle through. Correct?
Exactly. Because different creditors report to the credit bureaus at different times of the month. Some report
Right.
more frequently, some don't report as often as we would like them to.
Right.
So typically, the turn time, we collect that documentation to show that that credit item has been either paid down or paid off. We submit that information to our credit vendor, and then it takes about 3 to 5 days, 3 to 5 business days for that to be corrected and updated. So then we pull an updated credit report, and hopefully, and most times that has escalated the scores to where we need them to be. So that way we can get that client qualified.
Yes. Excellent.
Yes.
Excellent. And that's a very valuable service that not everybody does offer,
Hmm.
because, either A, they don't know about it, or B, it's too much work. Right?
Right. Right.
And there is a cost to it as well, right?
There is a cost, but the great thing for the client is that is not passed on to them. So that is
Wow.
something that we pay. So it depends on the situation, on the scenario, on how we would handle that. If it's something minor, a couple of items, then of course we can handle that. Sometimes we may have to wait and let the credit go through that full reporting cycle on its own. Just depends on how many items need to be updated.
Yeah. So, typically, what do you see for first-time home buyers right now as the biggest hurdle for them to getting into their loan, a new loan, or a new loan purchase?
Right now, a lot of it is interest rates, but I will say, we've, since the Fed Reserve notated a couple weeks ago that they were not going to be raising rates. They haven't raised rates the last two meetings, and then also had comments that they were going to reduce rates possibly 3 times next year. That has been very advantageous on the mortgage industry and very favorable for mortgage rates. So we've seen a great decline, which is a wonderful thing for clients to be able to find homes, and because of the payments obviously are reflected by that interest rate. So the one great thing about this community advantage program is it's actually offering a sub-market rate. So right now, I would say on your conventional loans, you're probably looking at a rate somewhere between 6.75 to maybe 7%.
Right.
But currently, this program is offering 6.125. So it's
Wow.
a huge advantage to clients to be able to qualify for more home and have those reasonable home payments.
Yeah. So interest rates is always going to be a big barrier to entry because of affordability, right? And
Right.
and the less your interest rates are, the more you could afford. So every point counts, right?
Oh, definitely. Definitely.
Every point counts. Where like now that we got on the topic of interest rates here, so we opened up Pandora's box. We just can't close it back up. Uh,
Yeah.
what is your opinion in regards to the stabilization of these home mortgages, right? Rates. Uh,
I think we're going to stabilize here. It's been very nice to see the decline, and it's come down pretty quickly. I don't We'll probably flatline for a little while until the Fed Reserve can see some more economic data. And then once that economic data is positive in the inflationary and employment arenas, then I think we'll see more decline come in the rate industry. But it's been nice to see that and bring some clients back into the market. So
yeah, I mean, like almost 2 months ago, or a month ago, we were seeing over 8%. So
yes.
to see them coming down about a point or so has really given the market a little bit of confidence. But it's all it's all about recency bias, right? If you remember 3% loans, you're you're going to want to go back there, right? But
Right.
now our latest memories are 8% loans, so 6% sounds like a great deal.
Exactly, exactly. The
So
good, it's kind of a double-edged sword there. It does also bring more competition back to
yeah,
the market too. So where when rates are a little higher, you didn't have as many buyers, so you weren't having as many offers on homes. But now we may be getting back into that multiple offer scenarios. So that's where you come in to make those great contracts and put the best foot forward for that client.
that's right. Well, our team does do a pretty good job of getting a good deal for our clients. The number one thing that we've been getting a lot is a lot more. And everybody wants to wait for the absolute best time to buy, right?
Right.
But I'm not going to lie to anybody. Over the last 12 months, few things happen here in Florida, and the markets that I serve directly is one, interest rates went up, right? The buyer pool came down
Hmm.
because people couldn't afford it, or they were waiting for property values to come down or interest rates to come down. Well, guess what? Property values did not come down,
No.
right? In a couple of different little markets, maybe we had 2-3% year over year decline. In the condo market, we had a little bit of a shakeup, but in the Florida market, it was more of a stall,
Hmm.
right? But what we were able to get is we were able to get buyers cash back towards closing,
Yes.
interest rate buy downs. We weren't competing with 7 different offers, right?
Right.
All above asking price with no appraisals and no loan inspection periods and no, my firstborn named after your grandfather, right? Like none of that was happening in the last 12 months. So there's always a give and take in these markets. And,
Mhm.
I know it's not in regards to the lending, but you you're going to pay either in interest or you're going to pay in property values.
Right.
There's a cost to this, and for those that are waiting for the market to cycle and property values to go down 50% like they did in 2007,
I don't see
that
that happening.
that ship has sailed, right?
Right.
Not every market cycle revolves around a depressionary event of a black swan event like 2007 was, or we might not ever see 2% mortgages again because we might not have a two, a stop of the economy, right?
Sure.
Right.
Right.
So interest rates went down to zero because our economy was frozen during the 2020.
Right.
Right. So that was a black swan event, which carried, property values to where they are right now.
Mhm.
That doesn't mean that they have to come down,
Right.
right? Because inflation already pushed them up, right? One of the best things that I tell people with first time home buyer programs, and that they could purchase their first time home buy, their first home doesn't have to be their last home, and this could be a great investment. And sure, you're paying X%, right? But guess what? Next year, you're paying that property with inflated dollars, right?
Right.
So you're paying yesterday's debt with today's money, which is worth less, right? So you, by purchasing today, no matter what it is, tomorrow it's cheaper,
Sure.
right?
And prices aren't coming down. And I tell clients, I say, there's no reason to sit and wait because you know what you're dealing, the hurdles that you have to deal with today, whether it's rate or insurance. If you wait, you don't know exactly what obstacles could be coming in the future. You know what you're dealing with today. You don't know what you're going to be dealing with in the future. If you find that house, buy it. You can always refinance with the rates. And if you wait, you lose that home that you fell in love with, and you may never find that same house again. So I encourage clients that if they are ready to buy, get out there and do it.
100%. 100%. Waiting costs you money.
Yes, 1,000%.
Right. The interest rate that you're paying today may be temporary. I don't like the date the rate, marry the house, date the rate thing, but it's very true. Once you have the asset, you have options. So, it's waiting on the sidelines isn't the best option for you.
Right. I
Uh,
agree wholeheartedly.
and if what about with these loan programs? Could you purchase a multifamily style property?
These are all for individual single family homes.
Okay,
So
so we couldn't purchase.
a duplex or a quad would not be an eligible property type.
Okay, but what about a condo or a townhouse?
Absolutely. That's still considered single family. You can actually buy manufactured homes with this program as
Oh
well.
wow,
Yes. So now
wow.
there are some stipulations on the manufactured home piece of it. It has to be a double wide or larger, can be a triple. If it's a single, it has to be, of a certain age. But there's a lot of niches when you get into manufactured homes, but it is a nice property eligible to be used with this program.
Very good, very good. And where are you seeing most of the activity right now in your side of the
Actually,
lending?
I see a lot of activity over in the Davenport area, in the
Okay,
Haines City area. A lot of activity over there, which this program is being utilized a lot in that area. You'd be surprised we can, of what homes will actually qualify. And then so if the home is located in a minority tract that is a 50% or higher, then there's no limit on the income restriction. So the client doesn't have to necessarily be limited to that 100% of the income level for Polk County, which is $74,300. They could make much more than that and still be able to utilize this program. So we just have to look at each client on an individual basis, because everybody's financial situation is always going to be a little bit different.
right.
And like I said, the property itself can, make a big determination on what programs will have available for them.
Now, when you say minority track, right?
Mhm.
How is that determined? What do you mean by the minority tract?
So there is a census area, census geocoding. We go to a website. It's through the federal government. It's called FFIEC.gov. And we go out there, you put in the property address, and it will bring up the census information for that area. And so it'll tell us what the median income is where that home's located, what the minority tract percentage is as well. And
Okay.
that is how we determine the property eligibility.
Okay. Excellent. And where do you and you find it on the same website, the income limitations and average income as well?
Yes, yes.
Okay.
So it's all there in one nice little concise area that we visit, and we'll print that information, put it into the file. So I always tell clients, hey, if you find something that you like, just shoot me the address. Let's take a look and see what if it will qualify for this program before they go out and actually see it. Because I'd hate for somebody to go fall in love with a property thinking that it will qualify and then it doesn't.
Yeah.
So,
Yeah, that's the exact same reason why I tell everybody that your first step should be pre-qualification,
oh,
right? Because
yes.
once if you qualify for if I show you a $500,000 house and you qualified for 350, you're not
Your
going
heart
back.
broke.
Yeah,
Yeah.
you're not going back. You're like, you know what? I'm just my shopping ends here.
Yep.
So
Yep.
yeah, so that's really good that you run it, make sure that before you even see it or show it. That's great for real estate. I have viewers that are real estate agents, so they could use you as a resource for that as well,
Yes.
and contact you for that. In regards to like the actual property, say that the property fits in
Yeah.
the income box, the area box, everything. What do we have as far as like stipulations for like rehabs, right? We deal with a lot of rehabs in the area. Old fix and flips is what an investor buys it, has owned it for less than 6 months. That person cannot purchase this property as an FHA program, right?
That is correct. That is correct.
FHA blocks six months or under. You need two appraisals. You need this,
Right.
you need that. Nobody wants to accept an FHA appraisal or under 6 months. How does this program differ in that way?
There is no restriction on that. So we do not look at that. It doesn't have any impact. As long as the home will appraise, then that's fine. It doesn't matter if it was a flip and they've had it for 3 months or 2 months. As long as it will appraise and the property qualifies along with the buyer, we're good to go.
All right, that's a huge. I wanted to make sure that everybody hears that because it's a very big point. If you have an FHA loan right now, and you're likely probably a first time home buyer, you're probably likely a person that would qualify for your community advantage program. You need to be taking a look at this. You really need to
Yes.
be taking a look at this
Oh,
because it's going to
absolutely.
open it up. There's a lot of fix and flips out there that look great, and you can't purchase it with an FHA program, but you can with this community advantage program, which is awesome.
Yes. Now we look at each property. If it's cosmetic issues with the home, not everything is going to be pristine when you find something. As long as it's just kind of cosmetic and there's no safety hazards, then there's no issues here using this program.
Wonderful,
Yeah.
wonderful. Yeah, it's. I mean, I'm excited. I'm excited. I've called you onto the show because I needed to get, and not wanted to. I needed to get this information out to the public. I think it's a very underserved community, right?
Yes.
And people aren't working with first time home buyers as much as they should because of their affordability.
Hmm.
And I think programs like you and community lending, like yours, like your bank. I've been so just as a disclosure here, I've been banking with the community bank like South State for that South State bought out
Hmm.
for over 20 years now, or about 20 years now, and I absolutely love small community banks. South State's no longer a small community bank, but they're more of a regional. But what the services that you guys provide your clients is just top notch.
Well, thank you.
I can't recommend South State enough. Julie, I appreciate your time. I'm going to honor our 30-minute because I know you have other things to do. But if you'd like to tell everybody how to reach you and anything else that you have to add, please take the time that you need. And we're grateful that you guys are here in the community lending to our first time home buyers.
Great. Well, again, thank you so much for having me on. I really appreciate the opportunity to be able to share such great information for your viewers. If you would like to reach out, you can reach me on my cell phone. That's always the best way to get me. That's 863-255-0495. And I'll give you my email address too. It is juliesurfaceteam@South State Bank. Again, that's JULI, no E, Surface, SURFACE, team, TEAM, @southstatebank.com. And I'll get you that information. So if you'd like to post that out on your video, you can.
Awesome. Yes, that would be great. And, as always, Julie, it's a pleasure speaking with you.
Yeah.
And we're definitely going to get some more first-time home buyers in 2024. Right off.
We're gonna rock it.
Absolutely. I think first-time home buyers are going to be on the comeback. 2024. That's the first-time home buyers year.
Yes. So I do want to mention one other thing about this wonderful program before we go. And
Okay.
you mentioned it earlier about seller concessions. Sellers weren't really willing to assist buyers with closing costs in the past. And that's really changed in the market. With this program, the seller can contribute up to 6% of the sales price towards their closing costs. So that's a huge benefit to the client. If they're, maybe they were looking like they had to get some down payment assistance. You may not have to do that with this program.
Wow. That's big.
Yeah.
That's very big. Very big. So yeah, every little bit helps.
Yes, it does.
Every little bit helps. So, thank you, Julie. Thank you to South State Bank for coming on. And like I said, I have nothing but great things to say about South State as a bank, as a lender, and as a community staple here in the area.
Well, we're super excited and look forward to 2024. And so Merry Christmas to everybody and Happy New Year.
Happy New Year. Merry Christmas. I'm going to definitely get this video out before the new year so that we can have everybody rocking and rolling to their 2024 home ownership plans.
I love it. All right, let's do it.
Awesome. Thank